Welcome back to Chapter 3 of our series, Tax Basics, Keep More of What You Earn. In this episode, titled Self-Employment Taxes, What Freelancers Need to Know, we're going to break down how to accurately calculate your self-employment tax obligations so you can keep more of your hard-earned money. So, let's dive in. More than a quarter of U.S. workers do some kind of freelance work, yet many don't realize they've quietly become their own payroll department. You send invoices, you get paid, but no one is skimming off taxes for you. The money feels yours until the IRS bill lands. That all-mine bank balance after a client pays you, it's quietly lying to you. Buried inside that deposit is money that already belongs to the IRS, especially for self-employment taxes. And this isn't just one unified bite. Self-employment tax is its own layer on top of your regular income tax, with its own rules, rates, and deadlines. Here's where many freelancers slip. They treat tax time as a once-a-year event instead of an ongoing system they run all year. The result is April panic, surprise bills, and penalties that could have been avoided with a few simple habits. Think of this episode as the moment you stop guessing and start running the tax side of your business on purpose. We'll break down what self-employment tax actually is, how it's calculated, and how to turn quarterly payments from a crisis into a routine. Here's the twist. The IRS doesn't actually care that your income is lumpy or that one client ghosted you. Those SE tax rules still assume you'll stay on top of things. So the real game for freelancers isn't just knowing the rates, it's designing a cash system that survives dry spells, big checks, and surprise expenses without blowing up at deadline time. That's where record-keeping and deductions stop being boring and start being protective gear. Mileage logs, home office space, insurance costs, and retirement contributions can all reshape what you actually owe if you track them in real time. Here's where the numbers start to feel different from a paycheck job, because there's no withholding safety net hiding in the background. On a W-2, you mostly react to what's already happened. Your check arrives pre-shrunk. As a freelancer, you're the one deciding how much to shrink every payment in real time. That's not just math, it's a system design decision. Start with the piece most people skip, separating business cash flow from tax cash flow. One simple move changes everything. Open a dedicated tax savings account and treat it like a one-way valve. Every time money hits your business account, peel off a percentage and move it over immediately. Not when you get around to it, not when the month ends, the same day. What percentage? You can reverse engineer it from your last return, but a practical starting range for many freelancers is 25 to 35% of profit to cover both layers of federal tax, adjusting as you learn your actual numbers. The goal isn't perfection, it's never being caught with $0 in that tax bucket when a deadline comes around. Next, layer in deductions as a living part of your workflow instead of an end-of-year scramble. You don't need to predict every write-off, you need a repeatable habit that catches them. When you pay for software, subscriptions, or gear, tag it instantly in your app or spreadsheet. For home office space, measure once, record the square footage, and file that note where you'll see it at year-end. Track health insurance premiums and retirement contributions where you can pull them up in seconds, not hours. Think of it like tuning a recipe. The more precisely you measure ingredients, as you cook, not after you eat, the more reliably you get the result you want. Sloppy inputs, lumpy tax bills. Clean inputs, smoother estimates. Finally, don't ignore the emotional side. Lumpy income makes big checks feel like windfalls. If you mentally spend 100% of every deposit, you'll resent every tax payment. But when you never see the tax slice in your spendable balance, those payments feel routine instead of like punishment. Over time, you're not just complying with rules, you're training your brain that only the post-tax number is truly yours. Think about 3 freelancers with the same $80,000 in client payments, but very different habits. Sam treats every deposit as spendable. By spring, the bank balance looks healthy, but Sam's books are a blur. At filing time, a big chunk of income turns out to be mixed personal and business costs, and several deductible items never get captured. The tax bill is bigger than it needed to be, and most of it has to go on a credit card. Jordan builds a simple habit. Every purchase gets a quick category tag. No fancy software, just consistent labels. By year-end, Jordan can clearly separate gear, education, travel, and a small home office space. That clarity trims thousands off taxable profit and makes estimated payments feel proportional instead of random. Riley goes one step further. Before taking on a new project, Riley runs a quick mental check. After setting aside my usual tax cut, does this rate still work? Over time, that single question quietly upgrades rates, filters out bad fit clients, and keeps profitable but punishing work off the calendar. Future tools will quietly reshape how you handle all this. Real-time apps are starting to feel less like calculators and more like co-pilots, flagging patterns you'd miss, nudging you when your pace drifts, and surfacing deductions the way a fitness tracker suggests extra steps. As reporting rules tighten and platforms share more data automatically, your job shifts from number cruncher to decision maker, choosing how aggressive to be, which benefits to prioritize, and when to trade flexibility for simplicity. As your income shifts, treat your system like a playlist you keep remixing. Bump up savings when work surges, dial it back when it slows, and test tools until one fits how your brain works. Your challenge this week: pick one change, a tax-only account, a new app, or a standing calendar reminder, and lock it in before your next client payment arrives. This was Owl Up, your daily step forward. This series continues with more chapters on owlup.co. Visit owlup.co to access the complete course and continue your learning journey. See you there!